here. Private equity buys Chinese. A business news roundup and this week's alphabet. Chinese shares have lost up to a third of their value since the highs of fourth quarter 2007. Is the slump over? Are markets corrected yet? Sentiment at large remains flat. The Shanghai Composite sank to 4,453 during the day, February 21, but closed down at 4,527, still struggling around my 4,600 baseline. The CSI 300 index pierced 5,000 for a day, but is back down again at 4,876 and is down about 15% since the year began. Shanghai B shares remain down at 318.98 so far this week, well below the start of the year, and Shenzhen Bs continue to slide and closed down again February 21 at 646.66. As we speak, markets on Friday in China are declining by 1 to 2%, so we'll see what it's like at the beginning of next week. Reports are that investor enthusiasm in China is waning, but private equity firms are raising money all over the world and eyeing China once again, this time hunting for bargains. BlackRock, the giant New York-based and New York Stock Exchange-listed investment company with over $1.33 trillion under management, opened its Beijing office this week. With Bank of China, BlackRock will launch a 10 billion yuan, that's around $1.5 billion US dollars, stock fund. The company is asking to manage new investments valued up to 30 billion US dollars for China Investment Corporation, China's sovereign wealth fund. BlackRock's global fund manager, Larry Fink, believes there are a number of Chinese stocks today that represent some very strong value, although he believes the market has yet to hit bottom. Private equity firm Blue Ridge China, a Beijing-based affiliate of America's Blue Ridge Capital, has raised almost $1.5 billion US dollars from retail investors in the USA and the Middle East to fund new Chinese startups. The investment period is 5 years and the focus is retail, real estate, and agricultural processing and other areas. Also in China, the People's Insurance Company Group, or PICC, a leading property insurer, is planning a private equity venture of unknown value. The company is also eyeing an IPO on Shanghai's domestic market. And JP Morgan anticipates private equity investment of $750 million US dollars this year in Asia, most likely China. That is double the exposure from last year. News of China's sovereign wealth fund, something we watch closely here at Sinomania, is that the China Investment Corp will begin hiring money managers for its overseas equity investing soon. The plan is not yet public, so there are few details, but the intent is to hire 2 to 3 companies for each of the fund's 4 mandated areas. And those 4 mandated areas are investment in natural resources, particularly in developing countries, acquiring foreign technology, research and development ventures, and brand name businesses of the most advanced economies. Signs are back of a restructuring of China's giant state aerospace conglomerates AVIC 1 and AVIC 2. The head of China's Commission of Science, Technology and Industry for National Defense, Huang Chang, said a leader and designer for a new venture to build large-capacity, wide-body jet aircraft to satisfy domestic demand for big passenger jets and compete directly with Airbus and Boeing will be decided by March. This will be an interesting one to watch as it will involve a lot of mergers and possibly the listing of some Chinese aerospace assets. In macro news, inflation rose over 7% year-on-year January. China's trade surplus was bigger than forecast, and money supply grew the fastest in almost 2 years. The Chinese central bank responded, saying that Beijing will use innovation in monetary policy this year, but gave no other clues. The yuan reacted by appreciating faster to close at Shanghai this week at 7.1436 per US dollar. The yuan has gained over 2% so far this year. It gained 7% in 2007. The majority of analysts believe the yuan will reach 6.70 to the dollar by the end of the year. China's automotive sector continues to heat up. China bull Donald Stotzheim of Roth Capital Partners predicts Americans will be buying 2 million cars a year from China by 2018. The list of Chinese companies and foreign joint ventures planning car exports to the USA is long and growing. So far, though, none is yet on track. Chery Automobile, I believe, is still the front runner to make a major impact on car sales in the United States. Chery said this week that the joint production agreement with Chrysler is still on, but not to expect any major developments soon. A Chrysler spokesman said They want to export small cars from China as soon as possible to North America and Latin America, but not until all global standards are met. The new target date is 2009 for exports. Chery already exports to 50 countries, accounting for 25% of its sales in 2007. I have no update on the possible Chery IPO. This week's alphabet starts with a number, 1. That's the number of China IPOs so far this year on Hong Kong. The IPO market appears to have dried up, but there are signs of new opportunities coming. 2 are expected soon. Honghua, a Chengdu-based oil rig manufacturer for an exciting energy security play, and the anticipated IPO of China Railway Construction. China Railway Construction received approval late last week for a dual A+H or Shanghai and Hong Kong listing, soon estimated at $4 billion US, the biggest IPO so far this year in global markets. The company will benefit from an expected $173 billion US worth of government investment in Chinese railways over the next few years. The company's rival, China Railway Group, has appreciated over 60% since its IPO in December 2007. It trades in Hong Kong under symbol 0390.HK. Shanghai Pudong Development Bank, which is part owned by Citigroup, is planning to sell up to 1 billion new A shares very soon, an announcement that caused the bank's shares to drop the maximum 10% on the Shanghai exchange. Rumors continue to plague Chinese financials about hidden exposure to the growing non-performing loan crisis in the United States. That's Sinomania for this week. I'll see you next time.